I think the mistake most people make, though, is they focus more on market share than market size. The bigger story here than market share is that the size of this market could 10x or 100x in the future. That's what we've seen. We often say, since BlackRock came into the crypto market, I guess our share of AUM as an asset manager in crypto is smaller. No surprise, BlackRock's an amazing firm, but our assets are up like 15x. So I'll take it. I think the same thing is happening here. This is like a giant stamp of approval that perps are a huge part of the future, that they don't have to be on traditional regulated platforms, that you can have large regulated entities with huge customer bases working with a project like Lighter. That's bullish perps.
While traders obsess over who wins the next crypto headline war, a much bigger shift is happening behind the scenes. Robinhood is partnering with decentralized infrastructure. And according to Bitwise CIO, Matt Hougan, investors focusing on market share are asking the wrong question entirely. The real question is this: what happens if the market itself becomes 10 times bigger? Or even 100 times larger than it is today? Perpetual futures, once considered a niche corner of crypto, are rapidly becoming one of the largest financial markets on Earth. And now, some of the biggest names in finance are quietly positioning themselves around that future. Robinhood's partnership with Lighter, Hyperliquid's explosive growth, and Ethereum's institutional resurgence may all be pieces of the same puzzle. In today's video, Bitwise's Matt Hougan and Ryan Rasmussen break down why Ethereum may be entering its phoenix rising from the ashes moment, why Hyperliquid continues to punch far above its weight class, and why Wall Street's entrance into decentralized finance could end up making everyone bigger, including the incumbents. If you enjoy this kind of macro crypto analysis, don't forget to like the video, subscribe to the channel, hit the notification bell, and let us know in the comments, which project do you think benefits the most if crypto's total addressable market expands 100x? Thanks, and enjoy the video.
I think what we saw ETH do, it went through this sort of personality crisis where the Ethereum Foundation became very market focused. The market loved it. It felt like ETH had its mojo back. And then the ETH Foundation pivoted. Some of those leaders left or were encouraged to leave. ETH focused down, the foundation focused down on some core principles. And you saw just a deflation in the environment that surrounded ETH. And that was reflected in price, but it was also reflected in vibes in crypto Twitter. And I think it got pretty sad. But the beauty of a decentralized system is that the leaders can emerge organically. And so what did the investment community that cares about ETH, not just from a principles perspective, but from a price perspective, do as well? They funded new institutions to take over that mantle, not to supplant what the ETH Foundation is doing around crops and core principles, but to take other parts of the ecosystem and move it forward. And that's like what you would write on a paper, right? You would say there are all these people who are economically incented to grow the size of the ecosystem, make sure price goes up, make sure we do institutional BD, make sure we get messaging right into the market, give people valuation frameworks. That would you would write on paper that they should coalesce to contribute money to a new platform that makes that happen. But so often those theoretical exercises don't manifest. What was amazing to me is that this manifested toot sweet. I mean, people recognized the problem. And before it got too bad, before ETH sort of spiraled, the community lost energy, it lost momentum, they took action to form these different pieces. So what do I hope that they do? I hope they do kind of what the ETH Foundation was doing before the pivot, kind of what you see from the Solana foundations and other market-focused institutions. I hope they drive BD. I hope they incentivize projects and investment. I hope they communicate about the investment opportunity and they provide another voice talking to institutions about why ETH is exciting. I would be, we own ETH in our index funds. We run ETFs. I was enormously pleased to see this. Because, as I said, I really do think it was a beautiful example of capitalism and incentives working in a decentralized format. And I think it shows how these decentralized formats can compete in a harshly competitive world really effectively. I kind of loved it, to be honest.
It makes me want to stand up and salute. Ryan, what about you? Do you see this institution as a peer, as an ally, as a resource? How do you think they're going to enter into the framework that's already going in this dialogue with institutions?
Yeah, well, I hope that this is a phoenix rising from the ashes scenario for Ethereum, because what we've seen time and time again over the past few years is the Ethereum Foundation alter its course or say it's altering its course, and then you never really know what that means or see that reflected in their actions, or rather developments and price action of Ethereum. Now, this sounds ultra critical of the folks that are contributing to the Ethereum development, and it's actually not. But what I think has been missing is this urgency to commercialize Ethereum, particularly when you have competitors that are highly focused on doing that, right? And 5 years ago, Ethereum dominated by such a large magnitude that it didn't have to focus on commercialization and finding ways to ship new competitive features, maybe raising fees, which sounds crazy. And I know some people are going to hate because it's against the values of why Ethereum was built. Great. But as an investor in Ethereum, you want to see some element of monetization and commercialization. I think they really need to focus on that. And when you start to think about these institutional focused Ethereum nonprofits, you can start to see a world where they're thinking about it from a capitalistic point of view. So I think that's really important. I hope this is a phoenix rising from the ashes moment from Ethereum.
Ethereum has spent the better part of the last few years fighting an identity crisis. Critics pointed to stagnant price action, an increasingly fragmented roadmap, and the rise of competitors like Solana and Hyperliquid. Meanwhile, the Ethereum Foundation faced mounting pressure from investors who wanted to see greater urgency around commercialization, institutional adoption, and value accrual. But according to Matt Hougan and Ryan Rasmussen, decentralized networks have a unique advantage: they can heal themselves. They believe this is exactly what is happening with Ethereum at the moment. If Ethereum's comeback story proves successful, it could reshape one of crypto's oldest debates. Can decentralized ecosystems adapt quickly enough to compete in an increasingly commercial world? And speaking of ecosystems competing, attention is rapidly shifting toward one of crypto's newest stars, Hyperliquid. The decentralized exchange has become impossible to ignore, generating enormous revenue, attracting hundreds of millions of dollars in ETF inflows, and expanding into everything from prediction markets to tokenized assets. Add Robinhood's decision to partner with rival platform Lighter for perpetual futures, and suddenly the question isn't whether decentralized trading is coming, it's who stands to dominate it over the next decade.
Yeah, well, I think, there's a natural relationship between flows and price, which makes sense and speaks to, Hyperliquid is up 100% or something over year to date. And so, of course, there's going to be flows into the ETF, which then drives the price higher and so forth. And then you have the counterfactual happening to things like Bitcoin. But I think the broader picture actually is investors sitting back and saying, what do I want to own for this next bull run, right? If crypto is repeating the 4-year cycle, which clearly it is, what do I want to buy today that 3 years from now will have done remarkably well? And I think Hyperliquid stands out as one of those kind of super apps that Matt's speaking about that is purpose built to accrue value to the token in a way that you couldn't do 3 years ago or 2 years ago. And I think that's what investors are seeing. I mean, if you look at how much revenue Hyperliquid generates, it's like $1 billion a year, and 99% of that goes to buying and burning the token. And so that creates an incredible amount of demand from a buyback perspective, higher than most companies in the S&P 500. And they're just getting started. I mean, these oil futures started 3 months ago, 4 months ago. The first pre-IPO where they saw a lot of traction was SpaceX, but you have OpenAI and Anthropic and a bunch of others coming over the next few years. You now have the S&P index licensed on Hyperliquid. You have HIP4 and the growth of prediction markets on Hyperliquid. So I think what investors are doing is taking a step back and saying, well, I want to own this asset that has incredible tokenomics, is shipping new features and new products, and is on this incredible growth trajectory.
Well, I think everything you said is true. It's going to get more competitive. There are going to be more providers. It's not going to be a winner take all. Most of these markets settle into something like an oligopic distribution, where one firm has 60% share, another has 30, another has 10, and then there are a few residual startups. That's like what we see throughout history. I wouldn't be shocked to see that repeat here. I think the mistake most people make, though, is they focus more on market share than market size. The bigger story here than market share is that the size of this market could 10x or 100x in the future, right? That's what we've seen. We often say, since BlackRock came into the crypto market, I guess our share of AUM as an asset manager in crypto is smaller. No surprise, BlackRock's an amazing firm, but our assets are up like 15x. So I'll take it. I think the same thing is happening here. This is like a giant stamp of approval that perps are a huge part of the future, that they don't have to be on traditional regulated platforms, that you can have large regulated entities with huge customer bases working with a project like Lighter. That's bullish perps, broadly speaking. So again, I would focus as much, actually more on market size than market share. And I think there'll be a couple of winners here. And right now, both Hyperliquid and Lighter look well positioned. I can be bullish on both. I know that sort of crypto tribalism says I have to pick sides, but I love all three of my kids. I love multiple different crypto projects. I'm good with that.
I think that it's going to continue to punch above its weight, and it will grow into that kind of higher tier, right? I mean, what you see is this smaller market cap asset generating hundreds of millions of inflows into ETFs within the first few months of launching, which is an incredible amount of inflows in any kind of ETF, crypto or not, over the first few years. We've gotten used to it in crypto. And that was kind of my point. We've gotten used to the fact that ETFs see hundreds of millions of inflows when they launch in the crypto space. But Matt will tell you more than anyone with his ETF experience that that's pretty abnormal. And so when you think about what Hyperliquid's done on a relative market cap basis to something like Solana or Ethereum or Bitcoin, I think that's very remarkable and speaks to the demand for this asset and the adoption of crypto ETFs relative to other industry ETFs. So I do think that Hyperliquid is doing remarkably well for a relatively young project and a smaller market cap asset in terms of flows and growth and adoption. And I don't think that it's going to be beat down by its larger competitors. I think it's going to continue to perform well. And all I see are more people asking about it, more people becoming aware of it, and more people finding ways to use Hyperliquid. I think that's bullish for it over the long term.
The most important takeaway from this discussion isn't whether Ethereum beats Solana, whether Hyperliquid outperforms Lighter, or whether Robinhood ultimately becomes a dominant player in decentralized finance. It's that the battlefield itself is expanding. Matt Hougan's comparison to BlackRock may end up being one of the most overlooked insights in crypto today. When BlackRock entered the market, many assumed it would crush smaller firms. Instead, Bitwise saw its crypto assets increase dramatically as institutional interest lifted the entire sector. Hougan believes we're watching that same dynamic unfold again, only this time it's happening across decentralized finance. Think about what's changed in just a few years. Ethereum is reorganizing around institutional adoption. Hyperliquid is generating revenue figures that rival major public companies. Robinhood is integrating decentralized infrastructure into its global ambitions. And institutions are no longer asking whether crypto belongs in the financial system, they're asking which products, platforms, and protocols will define the next generation of markets. Perhaps that's why Ryan Rasmussen remains so optimistic about Hyperliquid's future. Projects don't attract hundreds of millions in ETF inflows by accident. Networks don't survive existential crises unless they possess extraordinary resilience. And markets don't grow by 100x unless enough people begin to believe that the impossible is inevitable. The next bull market may not belong to a single token or a single company. It may belong to the platforms building the rails for a financial system that looks fundamentally different from the one we know today. And if Matt Hougan and Ryan Rasmussen are right, we're still incredibly early. If you enjoyed today's video, make sure to leave a like, subscribe for more in-depth crypto and macro analysis, and share this video with anyone trying to understand where digital assets are headed next. Thanks for watching, and we'll see you in the next one.